G'day taxpayers. The next RBA Monetary Policy Board meeting is only 3 weeks away now, and the futures market's pricing in pretty much a certain 25-point cut from the board at that meeting. But there's a lot of information coming out on the domestic economy over those next 3 weeks, and the geopolitical issues that are unfolding are clearly giving a downside risk to economic growth and the world economic performance, and they only add to the case for the RBA doing more than 25 basis points when they meet on the 8th of July. So, in no particular, I thought I'd have a look at the numbers that are coming out. And if there's any general bias towards economic weakness, then the case for a 50-point cut becomes very real. And don't forget, the RBA did consider a 50-point cut at its last meeting back in May. So it won't take much in terms of disappointing economic news for them to lock in a 50-point cut rather than just going to 25. But we've got the labour force numbers coming out later this week. Employment's been remarkably resilient. Yes, a lot of public sector and non-market job creation in that space, which is great. It's helped keep the labour market resilient when the economy's been weak. But has that hiring in the public sector sort of come to an end? And will it be relying on the private sector, which of course has been very weak in terms of the employment momentum? And do we get partly a statistical pullback in employment in the month, and importantly, a jump in the unemployment rate? Now, unemployment's been remarkably low, 4.1% for the best part of a year now. If it starts ticking up to 4.2, 4.3, then of course the case for a 50-point cut becomes more realistic. The May inflation numbers come out next week. We know that headline inflation's at 2.5%, a bit less actually, and the trimmed mean, for whatever that's worth, is also below 3% and has been for the best part of half a year now. So confirmation that inflation's on target, low, nothing to worry about anymore, will actually lock in the case for a 50-point cut. Job vacancies, the leading indicator for the unemployment rate, they've been weak for a while. They've sort of stabilised a bit in the last quarter or so, but any further resumption of that downside, again, builds the case. And things like building approvals, household spending, building approvals, down 13% in the last couple of months. We want to see a rebound in building approvals for housing supply reasons, but also for economic activity. So we'll be watching those closely. And household spending, which of course is a huge part of consumption and a big important part of GDP, it's been sort of flatlining basically since the start of the year. Are we consumers spending, or are we still sort of very, very cautious about the economic outlook for a whole bunch of reasons? So overlay that with geopolitical issues, which are really important, as I said at the outset. They're presenting a downside risk to the economic outlook. And, well, the 25 basis point cut on the 8th of July is as certain as you can be in any of these forecasts about RBA deliberations. But a 50-point cut is on the table, and each of these data points and what happens around the world will sort of tilt it either that way or leave it just being a little bit more cautious with a 25-point move. But get ready for another interest rate cut in 3 weeks' time, and it's just a matter of whether it's 25 or 50. Thanks.